medium perspective, new economies such as green economy and digital economy has been gaining momentum, particularly this year. From a short-term perspective, we expect growth, both investment and consumption to recover in 2023. Particularly, we will see manufacturing investment to maintain a impressive growth, underpinned particularly by high-end industries. And underpinned also by strong growth in household savings, consumption is likely to recover. We also expect fiscal policy to lend more support to household consumption next year. And regarding exports, as Chinese exporters have gained much competitiveness in the past couple of years, although external demand is to weaken next year, we expect exports to remain largely stable in nominal value.
What's the impact of the Federal Reserve's continued interest rate hike on the Chinese yuan and capital flows?
The renminbi is likely to appreciate somewhat against the US dollar next year. This is because, on the one hand, the US economy is likely to see negative growth in 2023, and the Fed will slow down in monetary tightening next year as well. On the other hand, economic growth is likely to recover in China. In fact, the renminbi has appreciated somewhat in the past couple of weeks amid an improvement in market sentiment. Accordingly, we would likely to see an increase in capital inflows in the next couple of quarters.
What do you think of the global macroeconomic trend in 2023? And is the Asia-Pacific region expected to continue its recovery next year?
Economic growth in the US and Europe is likely to drop further amid monetary tightening, as well as the lagged impact of elevated energy prices. At the same time, inflation pressure may decline, but probably not at a rapid pace. As for Asia-Pacific economies, exports would be affected by slowdown in the US and the European economy. But domestic demand is likely to remain resilient. As a result, GDP growth is expected to see moderate recovery in 2023 for this area. But of course, the picture differs somewhat across different economies. Overall, we expect risk assets which have been under pressure this year would likely perform better in 2023.